The year is 2018. The air in Seoul is thick with anticipation. Nexon, the undisputed titan of Asian gaming, the company that practically invented the free-to-play model, stands on the precipice of a deal that should have cemented its dynasty forever. A $10 billion handshake, poised to transfer control of the entire empire, built brick by digital brick by its enigmatic founder, Kim Jung-ju. This was supposed to be the ultimate validation, the final victory lap for the man who revolutionized how the world plays. But the deal wouldn't just fail, it would detonate, triggering an 18-month freefall that erased fortunes, shattered reputations, and left a $18 billion question mark hanging over the future of digital entertainment. The initial handshake, meant to secure the legacy of Kim Jung-ju, instead became the opening salvo in a quiet, brutal corporate war. Suddenly, the untouchable fortress of Nexon wasn't just shaky, it was crumbling. We are looking back at the precise moment the engine of the gaming giant seized. A moment shrouded in secrecy, corporate maneuvering, and the hubris of unparalleled success. What happens when the architect of a billion-dollar empire decides to walk away, but the buyers realize the foundation is rotten? The consequences were catastrophic, echoing far beyond the sterile boardrooms of Seoul and Tokyo. This is the story of how Nexon, the undisputed king of MMORPGs, imploded from within, leaving behind a ghost of its former glory. How does a company built on endless digital worlds suddenly find itself trapped in a very real, very finite financial nightmare? To understand the fall, we must first understand the gravity of the entity that fell. Nexon Corporation wasn't just a game developer, it was the architect of a revenue model that redefined global entertainment. Founded by Kim Jung-ju, often called the godfather of Korean gaming, Nexon pioneered the revolutionary concept of free-to-play, coupled with microtransactions. It was a system that proved infinitely scalable, pulling in billions from dedicated players who happily paid small amounts for digital convenience or vanity items. Their crown jewel, MapleStory, launched in 2003, became a cultural phenomenon, particularly across East Asia. By the early 2010s, Nexon wasn't just succeeding, it was printing money, generating annual revenues that routinely exceeded $2 billion. This colossal success was largely orchestrated from the shadows by Kim Jung-ju, a figure known for his reclusive nature and an almost philosophical approach to business, often viewing profit as a necessary byproduct of creating addictive digital experiences. He was the majority shareholder, controlling the empire through a labyrinthine structure centered around NXC Corporation, his private holding company. This opacity was both Nexon's strength and, ultimately, its greatest vulnerability. The stage for the crisis was set in 2017, when Nexon was trading at its peak, valued comfortably north of $18 billion. Kim Jung-ju, then 54, reportedly felt a creeping sense of finality. He had built the machine, now he wanted to step off the operational treadmill and focus on philanthropy through his foundation, the Wide Awake Dream Foundation. He made the decision that would ultimately rock the foundations of his creation. He decided to sell his controlling stake in NXC. The asking price? An ambitious $10 billion, securing his legacy and providing an unimaginable nest egg. The primary bidders were the giants of the industry, Tencent, the Chinese behemoth, and Netmarble, a major South Korean rival also heavily backed by powerful investors. The stakes were astronomical, representing not just a transfer of wealth, but the ownership of a global gaming template. The narrative suggested that Kim Jung-ju was simply passing the torch, a dignified exit for the pioneer. However, beneath the surface of this orderly succession, tensions were already mounting, fueled by internal corporate strife and a growing skepticism about Nexon's ability to replicate its past successes in the rapidly evolving mobile landscape. Who would win this high-stakes bidding war, and what did they see that the public was missing about the true value of this empire? The genesis of Nexon is a story ripped straight from the techno-optimism of the late 1990s. Kim Jung-ju, alongside co-founder Lee Young-hun, didn't invent online gaming, but they certainly perfected its monetization. While Western developers chased the box office model of selling a single product for $60, Kim saw a more sustainable path. In 1994, they launched the Kingdom of the Winds, Nexus. The Kingdom of the Winds, an early graphical MMORPG that, while niche, established the core user base and the infrastructure needed for persistent online worlds. The real breakthrough, however, arrived later with MapleStory. Launched initially in Korea in 2003, this 2D side-scrolling marvel was deceptively simple, yet incredibly deep, attracting a massive demographic that traditional, hardcore MMORPGs often excluded: younger players, casual gamers, and importantly, female gamers. This broad appeal was the perfect canvas for the microtransaction model. Instead of buying the game, players bought convenience, faster leveling, aesthetic costumes, and crucial inventory space. The revenue stream was constant, predictable, and seemingly inexhaustible. By 2005, Nexon was publicly traded on the Tokyo Stock Exchange, a testament to its international viability. The company rapidly expanded its portfolio, acquiring studios and developing massive hits like Dungeon Fighter Online, DFO, Asterisk, another absolute behemoth, particularly in China, which often accounted for nearly half of Nexon's total revenue in peak years, reportedly generating close to $1.5 billion annually on its own. This reliance on DFO was a major vulnerability, but in the boom years, it felt like an unshakable asset. Kim Jung-ju leveraged this financial firepower aggressively, buying up smaller studios across North America and Europe, attempting to transplant the F2P success model to Western audiences, albeit with mixed results. Key executives, often referred to as the old guard, managed the massive operations, enjoying the massive profits generated by player commitment. By the mid-2010s, Nexon commanded an empire encompassing dozens of live service titles. Kim Jung-ju, despite his immense wealth, estimated at well over $5 billion personally, maintained a relatively low profile, preferring the intellectual pursuit of technology over the daily grind of corporate PR. This period represented the zenith: stable cash flow, market dominance in key territories, and a technological lead in persistent online worlds. The company was an investment darling, its stock price a steady upward trajectory, justifying the founders' belief that they had cracked the ultimate digital economy. They were so dominant that the idea of their collapse seemed not just remote, but absurd, built upon the seemingly endless appetite of gamers for one more cosmetic upgrade. Yet, even as the stock hit its peak around 2017, the landscape was shifting beneath their digital feet. The first true warning signs weren't financial collapses. They were cultural missteps that signaled a dangerous disconnect between the company's leadership and its evolving player base. In the mid to late 2010s, the gaming world transitioned aggressively into mobile platforms, and Nexon struggled mightily to adapt its PC-centric behemoths. Their attempts to port successes like MapleStory often resulted in clunky, unpopular mobile iterations that failed to capture the magic of the originals, or worse, were riddled with predatory monetization schemes that alienated dedicated players. Simultaneously, the opaque governance structure, which Kim Jung-ju had always maintained, began to look less like strategic secrecy and more like risk exposure. Internal reports, often leaked years later, suggested that key leadership decisions were centralized, stifling innovation outside the core successful titles. The turning point, however, came not from bad games, but from bad PR. In 2018, Nexon faced a massive controversy surrounding MapleStory's asterisk random number generator, RNG, mechanics. Players discovered that the true odds for obtaining powerful or rare in-game items were significantly lower than what Nexon had publicly disclosed, some dropping below 1 in 10,000 chances. This wasn't just disappointing, it was legally questionable, bordering on outright fraud in consumer protection terms. The revelation sparked riots in the Korean gaming forums, leading to massive public outcry and formal government investigations into unfair trade practices. This eroded the fundamental trust that the free-to-play model depended upon. If the player couldn't trust the odds, they wouldn't invest their money. This trust deficit coincided perfectly with Kim Jung-ju's decision to initiate the $10 billion sale of NXC. Suddenly, potential buyers like Tencent and Netmarble weren't just evaluating an asset, they were inheriting a reputation tarnished by accusations of deceptive practices. Rumors began circulating that the high asking price reflected an overly optimistic valuation based on past earnings, not current systemic weaknesses. Whispers intensified that the reason Kim Jung-ju was so eager to exit wasn't philanthropy, but a desire to cash out before the inevitable market correction hit the legacy titles. Did the founder know something fundamental was broken that the market hadn't priced in yet? The year 2019 marked the official countdown to disaster. The initial bidding process for Kim Jung-ju's controlling stake in NXC, which included Nexon, became a protracted, messy affair. Tencent and Netmarble entered the final round, both offering figures reportedly approaching $10 billion for the controlling 90% stake. The consensus was that the deal was inevitable. Kim Jung-ju was ready to sign, and the market braced for the handover. However, in May 2019, the unthinkable happened: the deal collapsed. Publicly, the stated reason was a failure to agree on valuation adjustments in the final stages. Privately, industry analysts pointed to deep structural disagreements. Tencent allegedly wanted operational control immediately, something Kim Jung-ju and the NXC board were unwilling to cede entirely. This collapse was the first major shockwave. Suddenly, the $18 billion titan had no buyer, and the market reacted with immediate, brutal clarity. If the giants didn't want it at $10 billion, its intrinsic value must be significantly lower. Nexon's stock price, which had been artificially inflated by the merger speculation, began a sustained, agonizing descent. From the peak valuation, the company shed billions almost overnight. By the end of 2019, the stock was trading at levels unseen in years. Then came the operational devastation. With the sale off the table, Kim Jung-ju, reportedly feeling a lack of faith in the internal leadership team to navigate the coming mobile storm without his direct involvement, initiated a massive internal restructuring in early 2020. This involved sweeping leadership changes across key subsidiaries, including Nexon GT and Nexon Games. The public signal was clear: the old strategy was dead, and the company was adrift. Compounding this internal chaos, the core engine, Dungeon Fighter Online, began to show signs of fatigue. While still profitable, growth plateaued, and competition intensified, particularly as Netmarble successfully launched its own mobile interpretation, Lineage M***, cannibalizing Nexon's revenue share in the lucrative Korean market. Furthermore, the regulatory climate in China, where DFO was king, tightened significantly under new government oversight regarding game approvals and playtime restrictions for minors. Nexon's reliance on this single, massive revenue stream proved fatal when that stream began to throttle. By mid-2020, the market capitalization had plummeted by more than 60% from its 2017 peak. The $18 billion empire wasn't just shrinking, it was evaporating. The failure to sell meant Kim Jung-ju was stuck holding a majority share in a rapidly devaluing, management-challenged entity. The narrative shifted from "Kim Jung-ju steps down gracefully" to "Kim Jung-ju engineered an impossible sale that blew up, trapping him in the wreckage." The once impenetrable walls of the kingdom were breached by a series of tactical blunders and unforeseen market shifts, all triggered by that one failed handshake in May 2019. The final blow wasn't just financial, it was existential: the loss of market confidence that proved impossible to regain. The aftermath of the NXC collapse saw Kim Jung-ju pivot from seller to survivor, desperately trying to re-engineer the massive conglomerate. In a stunning reversal, in February 2021, Kim Jung-ju announced he would not be stepping away after all. Instead, he would take on the role of executive chairman at NXC, signaling a direct, hands-on attempt to salvage the corporation and recapture lost momentum. This admission of retreat from his planned philanthropic departure was perhaps the most telling indicator of the severity of the crisis. The empire needed its founder back at the helm, patching leaks in a rapidly sinking ship. The immediate operational strategy focused heavily on aggressive diversification, attempting to reduce the painful reliance on DFO and MapleStory. Nexon poured resources into new mobile titles, leveraging the *Cartwriter* IP and attempting, often unsuccessfully, to break into new genres. However, the long-term damage to investor trust was severe. The initial $10 billion valuation was gone, replaced by skepticism regarding the company's innovation pipeline and governance transparency. The saga serves as a potent case study in the perils of concentrated ownership and the danger of over-reliance on legacy intellectual property in the hyper-accelerated world of digital media. While Nexon remains a significant player, its status as the uncontested titan of East Asian gaming was permanently eroded by 2022. having lost tens of billions in shareholder value and ceded critical ground to competitors like Tencent and Netmarble, who effectively waited out the implosion. Kim Jung-ju himself faced further scrutiny when, in 2022, he was allegedly implicated in a bribery investigation concerning alleged favors sought for his brother-in-law's business dealings, further clouding the legacy of the pioneer. The narrative trajectory shifted from a successful exit to a prolonged struggle against internal demons and external regulatory pressures. The ghost of the $18 billion deal still haunts Nexon's valuation, a stark reminder that even the most dominant digital empires are ultimately governed by real-world trust and strategic agility. Can Nexon ever truly escape the shadow of its own spectacular near collapse?